Traders, the FX Hunter here, and in this video I want to show you the revolutionary way how I'm looking for the trades and how I'm thinking about the markets, and I want to show you the tools I am working on, and it's almost developed but it's not done yet, so please don't ask me for the test versions, etc, etc. So those who knows me knows that I am mostly watching the bank's positions, and I'm basically following big players, right? So to be successful traders, we must be trading in the direction with the biggest players because they are controlling the price. They are the only one who can move the price. But there is a more aspects which are influencing the way the market how the market is moving, and it's the as well the liquidity, and the liquidity is provided by the retail traders. And I was doing this research for many years. Maybe if you're following my Telegram, you can see I was mentioning this time to time, and right now I finally find a way how to watch the both sides and find the uh, balance and exactly spot when the trend is able to start, when it all can place. So first of all, as well, of course, the fundamentals are very important, but I must say that right now I have spent I never was taking so much care about the fundamentals, right, because I was doing this, but always I like to educate myself, so I have spent some time with studying the fundamentals. I even spend the money for some course, for some fundamental course to, to educate myself. However, I realized one thing: the markets are not the economy. Again, I repeat it: the markets are not the economy. So even when some, like, look at this example, Eurozone is totally fucked right now. They are basically in the big problems with these corona bonds. The countries are in the trouble: the Spain, the Italy, the Greeks, and there is a lot of things going on which would make the euro very bearish. But if we look to the positions of the big players, uh, we can see they are actually bullish, you see. So uh, so the economy and the fundamentals say something, but the biggest players, the commitment of traders, COT, if you want to, is doing something different right now. Maybe the fundamentals and the COT, one day it will be in the sync, but it can take time, I mean, it's it's better to watch what's really happening in the markets, and the fundamentals for me is a very big speculations, because there is a lot of things which are going on, and there is a many ways how you can interpret it, how you can understand it. But if you watch the numbers, this is just the one numbers, and this says what this says, and this is reflects what is happening behind the chart. So I have developed this tool with my core. I have actually found out after many years one great core, and it's interesting that I was looking for the many freelancers around the world, and this guy is actually the guy who's living in the same country as me. It's amazing. So we actually met, and he did everything because he was pretty amazed by the idea how I'm doing it, and he was actually in my signal service as well. So he's still in there, of course, but he's got it now for free because we are the partners in this project. So I want to show you what is here and how is it connected with the platform, and what it shows, and how it's super amazing to find the trades based on these things, and how easy it is to choose the direction of the trades, and then you can use just the simple price action to enter the trades and manage the risk, and everything. So This is the COT data. Everyone knows my Excel sheet, which I was always protecting. You know that it's my baby, actually it is. I still love it. But we decided to later to give this to the public. Of course, it's not gonna be free because I don't want anyone to share it or resell it. You know, so there will be of course the membership for this, and it will be locked down for the IP and etc. So only those who really are interested in this will have the access into it. So let's start what we have here. So we have actually the groups of the of the of the pairs or the commodities and the things which are affecting the market, right? So we have here if you look here, wait a second, let me take this tool. We have S&P, we have a S&P and the Cooper, which is a COP. These two are actually affecting the markets because S&P is actually showing the real health of the economy, right? Cooper is affecting a lot of it's actually showing the industry. When the industry is running, the Cooper is growing because the industries are buying, industries company are buying the Cooper as well. When the Cooper is growing, then the commodity baskets are growing as well, which is the Aussie cat, Kiwi, Mexican peso, right? So this is the commodity currencies. The next one is the safe haven currencies. These currencies are getting strong when the risk off mode is here, when the economy and the markets are nervous. So I have put all of this into the color. So is the USD franc, Japanese yen. This is the basic which everyone who trades the Forex or something like that should understand. Then here is this Euro currencies. I mean, the GBP of course is not in the Eurozone anymore because of these Brexit things. However, they used to be called like Euro currencies, but right now they are actually the split. So this could be like each one's for them some. But however, I still like to make them like this. Next, what do we have here is the commodities, which is the gold, silver, oil, palladium, and platinum, right? So these are the commodity currencies, which is good to trade as well, but I must be honest that I don't trade it anymore. And here I have the VIX, Nasdaq, Dow Jones, as well the BTC. So we have the COT data for all of this. And but here is the one problem with the BTC. BTC is the highly manipulated market, of course, and the banks would be stupid if they trade it on the spot. So they of course trade it here, but they use as well the unregulated markets to trade it. So don't use this data at all, and I'm not looking at it. As well, I don't trade the VIX, Nasdaq, and the Dow Jones. And I actually must say that I have stopped to trade gold, silver, oil, and anything of that. So what I do now, I don't of course trade S&P and Cooper. I trade just the Forex. I was thinking about this quite for some time, and Forex is my field. This is what I understand. I understand these movements and everything behind it, right? So all of these other things it's different markets, different movements, different aspects what could make it. The Forex is a lot about the manipulation, these tricky things, and this is what I understand. And I was following the banks and studying their moves, and right now I think I'm very good in it, and this is what I do. Right, so this is what we have here. Down right, the next thing is basically my COT. So what does it shows is this. It's a positions for each currency the contract, right? So we have right now like two sides. We have this is sorry. This one is euro contract, right? Here the history is quite long. I mean we have the automated it, so it has downloading the history until the year 1995. So if you want to learn how to use the COT, you can basically use this tool to go back in the charts and study when was the trend change, because it's actually showing here as my positions are changing, and it's changing the color, so we can see that here was definitely trend change from the shorts to the longs. Then the euro was bullish. It's actually, yeah, we can see it. It was in 2017, so the euro was bullish, right? Then it was ranging on the top on the 2018, and then we have this market, this huge downtrend on the euro for the 2 years almost. It was actually pretty boring downtrend because it was moving sideways. Right now it's bullish, so we can see it here again, right? So anyway, here is all this informations, like the long positions, here is this all the informations like the here is all the informations like the longs positions, right? So we can see the contracts of the banks which are the long, as well next to it shorts positions, right? So we are seeing how they, for example, here they reduce their shorts and they slightly growing the long, so it's getting the bullish. We can see that once they started to do it, our color has changed to the green one, and we can see that it's bullish, so it's showing the bullish. They are bullish 65% to the bullish side. We can see the net positions, how they switched from the negative to the positive territory, right? As well, here is the total, which is the total volume. So we must know how to use it, because the total volume, you can see that in the past there was a volume around 300 something, 400. So 400k total contracts was the usually traded on the euro. However, right now we have just 265Ks. So what that means? That means that of course we are getting the bullish, but it's not with the full volume as it's used to be. So it can be used for the manipulation, of course, right? So next one is the commercials. Commercials is the other side. It's the hedgers, and here we can see that the hedgers actually they are hedging the position. So when the euro is dropping, they've been hedging, right? So now when the euro is going up, they closing their hedges, so it's actually confirming the move, and we can see that they are switching to the negative. They always go these two sides opposites. There's as well, of course, the another sides like the spreads, which could be another report, the dealers contracts, which could be the another reports. However, I'm watching just these two, and especially just these ones, right? Because these ones is this which I want to trade with. So this is what you can see in this indicator, right? So we have, of course, the data for all of these instruments, as I said. Next one, what is very important for me, is the sentiment. In the sentiment, I am watching the retail traders, and this is where the all fun starts. So what do we see here? We can see for the each contract, for example, here we have the Aussie. For example, here we have the Aussie cat. Let me clear this. So we have the Aussie cat, right? And we can see the shortage percentage and the long percentage. So we can see that the 81% of the retail traders is to the short and 19% to the longs, which is quite good information. But how I'm using this personally is that I'm always looking for the biggest extremes, right? So what I want to do is to find on the COT the direction by the banks, and then I want to see the exact opposite from the retail traders. So because if that happens, then the confluences make the sense. So if the banks are bullish and the retail traders are bearish, then the contracts can do the opposite side. So they ones can be buying, another ones are the selling. That's the perfect confluences for the trend, right? So this is what I need to see, and yeah, it's very simple. And then what is important to know is to see it in the platform, and now it comes the best thing of all of this. So let's first look what the COT data says. So let's start with the S&P 500, right? So S&P 500, as I said, it's it's uh, it's showing like a half of the economy, because it's the contract index of the 500 most strongest companies in this index, which are actually showing the economy of the US, because its economy is based on that. So what do we see here is that in the past, actually not so much past, it's like 1 month, it switched to the bearish side. We can see that the biggest players, they started to close their longs positions. They've been on here on the 82k, and since then they dropped 20k to 62, and with their shorts they has been around 80, 75. He was something like a 70 was their average, and last 1, 2, 3, 4, 5, 6 weeks they almost added 20k, right? So we can see drop 20k in the longs and added 20k in the shorts, which making it 60% to the short size. I think we will see the huge drop on the S&P 500, which I already posted in my Telegram. Just check that. Go look to the S&P. I was comparing it with the drop of in the 1930. There's a couple guys who copied this from me, but anyway, this is like always someone copied me. So our S&P 500 looks bearish. Then what's that mean? So if the economy start to look bearish, what's happening with the other baskets? Safe havens start to be bullish, commodity currencies bearish, right? So just by watching S&P 500, it's gave us some clue what could be happening with these two baskets, right? And I even didn't look at them yet. Right now, let's check the Cooper. So we said that the Cooper is showing how the industries are as well working. So if the Cooper is going down to probably these will be going down as well. The commodity currencies, because these countries are biggest producers of the commodities, which the Cooper is a commodity. So let's look to the Cooper. So what do we see here on the Cooper is that okay, there is a big reducement of the positions in the total, right? So we can see that the banks has been on the 50 to the longs, to the shorts, which is fine. But then since the January, we can see since the January, here was the biggest change, right? So we can see these biggest changes here, and what's happening since there. Look at this short side. It's 57% to the short side, 43% to the long side. We can see that they reduced longs massively from the 100k to the 48, and shorts from the 100k to the 63. So it's as well bearish. It's turning to the bearish downtrend. Of course, you must compare it with the charts. I will not be doing it with these two right now. So for now, by just analyzing these two markets, this giving me the clue that the stocks are getting bearish. The industries for the commodity currencies are getting bearish. So that, what does it mean? Again, these pairs could be getting strong, these pairs could be getting weak, and these ones are the different story. But just based on knowing that these three pairs will be strong, these four will be weak. If you look at it like that, that could be the possible trade for for the each currency, for the each one. So that would mean that you can actually trade Aussie USD, Aussie CAD, sorry, USD CAD, Kiwi USD, and this one. So you have possible another 12 trades, right? Because you have it on the franc as well, all these three. You have it as well on the JPY, right? So then we have, okay, so this is what we said. Right now let's go to the USD. If is that true? We said that the safe haven currencies are getting strong. So what do we see here? What's going on with the dollar? Let's look where was the last change. So we can see it was in here. Here is something what's happened on the markets, and what was that, and what's happening since here is that we had the 31k contracts, then it was close to the 19, and since then here was the contract, and this is as well what I must mark up in this website, but I will do that. So we can see that since this contract was closed in here, we can see overall 10k change in the positions. So what was happening since then? We can see that the longs was growing from 19, 22, 22, 23, 26, 24, 23. Overall, it's a growing trend, right? And the shorts, 12, 9, blah, 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 that's 10, 7, right? Sometimes it's confusing, but what helps us a lot is this percentage. So what we see here is that we are 76% to the long side and 24% to the short side. So the dollar is bullish. Next one, let's go to the franc. This is a Swiss franc, and here we have, and here is the USD CHF, right? So this is what I have done here is that we of course have the data for the franc contract as it's on the spot. But on USD franc is something different because, I mean different, it looks different because when we have this is franc contract, but it's all traded against the USD, and as this one is USD CHF, we has to exchange it. So right now we are looking to the franc. Franc, longs growing, shorts dropped from 12k to 5k, right? 68% to the long side, bullish franc, right? Next one is JPY. What is this? All right, so it's here, right? So next one is the JPY. This is the Japanese yen. On the other side is USD JPY. Here is basically, so if you want to trade the crosses, you can look to the JPY contract. If you want to trade USD JPY, look at this one. So I will explain it right now. So basically, we can see that the longs positions are slightly in the growing trend on the USD JPY, and the shorts rapidly closed, right? So it's bullish for the JPY. We are 66% bullish on the JPY. So if you look to the opposite side, let me make it like this. So if you look to the USD JPY, as it's traded against the USD, so we can see that the longs positions, fuck me, why this, right? So we can see that the longs are being closed, shorts growing. So it's actually the same if you compare this, but as the yen is traded against the USD, so it has to be changed like this, right? So This is what makes now clear how I get the data for the USD JPY. When is it reported for the yen? Right, so it's actually confirming my idea that the S&P and 5 and Cooper, when is it dropping, these two should be getting strong. They are getting strong, right? So it's fine. So maybe this, what I was thinking, is correct. Let's look to the Aussie. Aussie, we said that if those two are dropping, these four should be weakening as well, because it's a risk currencies, they are based on the commodities, and if the economy is going down, these currencies should be going down too. And what is here? So let's look to the longs. Here is the Aussie. Longs were 64k, right now 23. Shorts were 116, right now 59. So it's dropped because the total volume has dropped. However, still we are 71% to the short side on the Aussie, and we can see that net positions are minus 35k, which is great. So the Aussie is bearish. Interesting. USD cat should be bearish, and look at this. What do we have here? So we have longs being closed, shorts still doubled. So we are 74% to the short side against 26% to the longs. Net positions from minus 9k to the minus 32. This is a bearish trend for the cat, so the cat should be weak. Next one, Kiwi. Here is the longs positions. We can see they are being closed. We can see that the shorts being held. We are 70% to the short side on the Kiwi. Perfect, right? Net positions growing, right? The details, how to use this correctly, how far this can go, we can use this maximum and the minimum numbers, and this I will not explain in this video, but maybe in the future, but this is just to make a basics. And right now let's look at the last one, which is the Mexican peso. So the Mexican peso should be weak as well, and we can see it's actually getting weak right now. So what we have here is that is this. So it's a massive amount closing of the longs positions, and the short positions still being held. However, if you look to the couple last weeks, so we are growing from 18 to 27. So just based on this, you can see I have made I just looked at these two pairs. We of course I didn't even look to the charts yet, and I know what I want to trade. Right now let's look to the euro and the GBP, which is the last two which we did not analyze it. So what we see here on the euro is, it's simple. This is very simple thanks to my graphical indicator. So you can see that basically here was the contract end, and what happened then is that the banks has closed massive amount of the shorts. They actually has been on their maximum shorts in the history. They never been so shorted like this. So always when this appear, they mostly has to take the profit. So they taking the profit from the shorts. Shorts has been closed, longs still holding, so the euro bullish, right? And let's go to the GBP. GBP is bearish now, right? Because if you look at it like this, we can see that the long positions are being closed, shorts still somehow held, but right now they are growing, right? So we can see that the shorts has growth from the 29 to the 45. Longs has dropped from the 76 to it, so it's almost double, right? And we actually flipped to the negative net positions, and it's still growing. So the pound is bearish right now, right? So right now I have in my mind, actually you don't have to remember all the pairs. If you know just the groups, it's easy. So what do we know? Again, I will repeat it. We know that these three safe haven currencies bullish: euro bullish, pound bearish, these four bearish, these rest I don't care, because based on this I can make a lot of trades and I can pick up just the best ones. Right now I'm going to this sentiment and I'm going to check this. What do I have here? If I make it like this, we can see euro GBP. We have bullish euro, we had the bearish pound. And look what the retail traders are doing. They are basically 83% of the retail are shorting. This is amazing. So if 83% of the retail is shorting and we know that the banks are bullish, there has to be trend to the up, right? So let's go to the charts. Let's check it what's happening here on the euro GBP. Boom. Look how it's going up, right? So it's very simple. And right now, check this amazing thing. So here is this percentage which we can see in here, right? So we can see this. This is what we see here, and these lines are actually, let me change this color. So these lines are actually the average entries. So what does it help us to know when we know where the retail traders have their average entry? It helps us to know where the market will probably never go. So that's why we actually had this trade in my signals group where we entered at the long. We actually we've been taken in the trade in here, and we had the stop loss below here. Because why? Because I knew that most likely the banks will not give a chance to all these 83% of traders to get out break even. They will be most likely forcing it even higher, because if you look as well what is here, we can see that on these shorts it's like 4,000 lots. There is a 4,000 lots traded in this average price, which is great money to take from the traders, because the market is when the one side is taking money from this other side, and this 4,000 lots on the leverage, when this is moving up, it's amazing money. It's like 40,000 dollars on the one pip, and it's moving right now by many pips. I mean, they are actually losing currently 120 pips. So there is like more than 4 millions. They are actually taking 4 millions from the retail traders right now, and this is just one. This is just the one provider of this retail data. Yes, there is many providers of this retail data, but this is the one which I have picked up, and it can be working for me, and you can see it's working for me. Because why? Because the behavior of the traders is the same. So I of course don't need to have complete volume from the whole market, but this one is actually enough for me. So right, so let's continue now what to do. So we know again the euro is bullish, pound is bearish, right? So what do I do now? I click buy, and what appears here is this amazing thing, which is this tool which is helping me to plan the trades, and it's now all the fun starts. So how I'm gonna plan my trades is, of course, I need to use some technical skills, which is not so difficult. But if you want to, I can give you this template, which helps you a lot, because if you don't know how to spot the correct levels, this one is using the whole numbers, which is good enough to know where to spot the trade or where to put targets. You can trade from the number to number, and you can from the whole number to whole number, and you can see it's like nice pips to be taken here, you know, because these levels, as you can see, they are very beautifully respected. I mean, look, even if you don't know any, if you don't know any how to draw the good supports, resistances, you can trade of whole numbers, half numbers, and you can be good enough, right? So what do we did? This is this tool for the planning the trades. So it has placed this this like this thing for the analyzing the market. So we have it here right now, and look how amazing is this. So if we put our stop loss below here, we could be 100% sure that the price, I mean not 100% sure, but we can have a very big chance that the price will not come here, right? Because here is these losers, and they must be punished. If we put our target into the next numbers, and on this number we will set the break-even or whatever, but this is not the purpose of this video to explain how to trade, but to show this tool. Look, so we have set this trade, right? Because we know euro is bullish, pound is bearish, and we know the retail traders are mostly right now bearish. We want to go with those which are winning, and it's just 17% of the traders right now. So it's most likely that the price will go up there because of the bank's direction and etc. The retail traders. So this is Euro GBP. Next trade, what we can look, we as well analyze that we have the Aussie is bearish, right? So let's go to the Aussie. Here is the Aussie, and what we see now, we are seeing this that the retail traders are 49% to the longs, 51% to the short side, but it's like 50-50. So what's that mean? That means that it could go still higher or lower, but let's check this. So if I click this, it will show me complete history of the retail traders. So we can see that it's dropping. They've been much less on the long side. So that is probably was profit taking of these shorts. So what we could look for now for the trade, very simple, is if is it 50-50, I will of course not be trading the breakout. If is it 50-50, that is better to look for the some retracement trade first. So here is this this moving average, it's a 50 and 200, and once they are getting below, it will start to look good. So I can plan my trade as a sell, and you can see it put your trade in here, and with the target to the whole level, and it's good to put put my stop loss above the whole level, or even I could put it above here. It would be maybe too far, how, I don't know. So this trade, of course, I'm looking for the bearishness, but this percentage is not so convincing for me. So what I think that the market could move higher again before this happen, right? But what I want to do is I want to do this planning here. So I will put the Aussie right now, and here is how I'm gonna plan this trade. So I want to put it like this. They could test this zone which was bouncing here, and I could put my star and so this is just the pre-plan, right? It doesn't mean that I will take the trade. If I want to take a trade, then I will show you this amazing tool what to do. So next one is GBP. GBP, we can see how perfectly is this working. So we have analyzed that it's bearish, and we actually knew it already here. Yeah, and right now it's like 79 to 21%, and here is still potential that it will be dropping down here. So what I could do, if I really don't want to be hit in my stop loss, I could set the trade like this. with the stop loss above the retail's positions, right? And my target would be here, so it's perfect. So if that retrace, that would be nice to trade it like this, right? Next one is euro. We said that it's bullish. However, the banks are bullish and the retail traders, most of them are bullish as well. So it will probably not go up right now. So I'm not interested in this trade. USD franc, we said it's bearish. Right now it looks like more of the retail traders are bearish. So if they are bearish, what's gonna be happening right now here? Most likely here will be the stop losses, right? So how I will plan my trade is like this. So I will set it to sell, and most likely I will might it would go a little bit higher, because what from my experiences with these indicators, what is happening once the market start to move up, people start to buy, right? So uh, this is where the buyers, we will have more buyers, which will be nice opposite liquidity for the sellers. And once this number of the buyers will grow, and there will be less sellers, then we will see probably a big move down into this liquidity zone, right? So for now I'm just planning the trade like this. I'm not activating it yet, and I'm waiting, right? So I have it in my platform. So let me clear this. Next one is USD CAD. USD CAD, we have a trade in my signals group, and basically this one is still possible to join, because I was speculating on this break, in here. And why I was speculating on that? Because we all agreed in the previous analysis of the banks that they are bearish on the CAD. So that would mean that USD CAD could move up. And if we look to the positions of the retail traders, most of them are shorting, and they are trapped with their average price in here. So just 23% of them are to the long side. So I think that price will go up, and so I could plan my long trade like this. Very simple, and I'm not. Now, when the positions, the percentage of the retail traders are like this, I'm not scared to put the trade like this, even just to break it, or even enter with the current market position, and where I will plan my trade, maybe this one or maybe here. Very possible target, very easy, right? So next one is USD JPY. This numbers, when is it 44% to the 56? I would still wait before the happen what I want to, but definitely I want to short this market, and I explained this in my trading view analysis. I'm still thinking here is the stop losses, and here will be nice zone to use it for the short side. So how I will plan my trade is simple like this. I will put it above, right, and I will be waiting until the percentage will do what I want to. And this market, I believe, could go all the way down. However, I will not be speculating for such a long time. I will do always just two levels of the whole numbers. It's a beautiful number, because as well in here, right, so the price might come down here, and he will start doing some retracements again. So this is how I will plan this trade. Next one is kiwi. Kiwi, beautiful, right? So we said that market makers are bearish on the kiwi, and we can see, what do we see is that retail traders are very bullish. So this is what we need to see to have a trend, right? 21% to the short side from the retail traders. That's perfect for the shorting. So we have actually the trade in my signal service for the short, and here right now, if you wait just for small retracement, if you really don't want to be hit, you can put your stop loss just like this, right? Just like this, which is 176 pips, but my long-term target is 0.50, which is much lower than is here. But if we stick to the rules, just the two whole numbers, it's perfect, right? Because most likely here on this level, on these lows, here will be some bounce, some short-term bounce, where even more people start to buy. Once they take them out, the continuation of the trend will be down. Next one is Aussie yen. This one was I was fighting with this market because I already shorted it in here, and it was taking so much time before this changed. Because if you look to these numbers, it was always more to the more people to the short side, and slowly it's changing. So we are now just 52% to the short side, and it was much more in the past, right? So right now this is changing, and I believe that this will go even lower. However, this gap in here is still too big, so this here still could be some manipulation. And if you I am in the trade, and actually I am right now somehow break even, because I think I have entered at somewhere in around this price, right? So we have something like this, right? Yeah. So and our target is, I think, somewhere here. Anyway, this is possible to trade it like this, but it's like this percentage are still not so convincing. However, if you enter like this with the smaller risk, that's you have the potential that it will break, then the numbers will change and you can add even more, right? So I can just plan this trade like that for the purpose of showing you this tool. Right now this is the cat franc, right? Simple. So again, we all agreed the cat is weak, franc is safe haven currencies. Look what's happening right now in here. 77% of the traders to the longs, 23% to the short, so we can go sell, right? Of course we don't have to enter just like this, but most likely this will break, right? So you can, I don't like to trade the breakouts, but this numbers giving me so much confidence that I would be able to enter the trade like this. Very simple, right? Next one is Cadian. Cadian is crazy market. I actually was expecting the price to drop from this level, because here was some channel which I don't have now in this platform, and it went all the way up, and our stop loss was above in here, and it didn't hit. Now it's going down, and again, so just need to look what we have seen in our COT and what we see on this indicator. So we can see that we all know, sorry, why I have opened this new chart, because I wanted to have all this in one chart. Anyway, I will make it here. So sorry, I'm doing this on one purpose, because then I want to show you something, how all the trades which I have planned here are showing here. So here, as I said, if you don't have a trade, you can trade a sell with the stop losses. The stop losses, if you don't want to put so big stop loss, of course it's too much big, but the whole numbers are working in these situations. So you can set the trade like this one, right? Because in here, if this channel will be respected, the price can come somehow here, so you can go like that, right? So still with the 1 to 123 ratio. As well, I want to put this cat franc trade in here. So how was that? Right, so here is the why I'm almost, I cannot say that I am 100% sure. We are never 100% sure, but what give me big confidence is that we all seen that on the cat, we can see the cat, the banks are bearish. On the franc, it's bullish, so I think it's good. And the retail traders is doing exact opposite, right? So we can see that um, it should happen. It should happen anyway. So next one is Eurocat, right? Eurocat, what do we have here? So we all agreed that the euro is bullish, right? We can see that the cat is bearish again. So here could go to buy trade, and right now we are seeing just 32% to the long side, which is perfect number for us, and 68% to the long side. So most likely this trade could happen very nicely, because we have 3 times bounced here. The people will be trading this short, so the price could drop down, but most likely it will break up, right? So easy trade. This is the euro pound, which we already spoke about. This is the euro kiwi, right? This trade is already happening. Shame we've been stopped out on our trade here, but right now, as again, we can see how this is working. So euro bullish, kiwi bearish by the banks. We can see 78% retail traders are wrong. They are bearish. So what probably is going to happen here is this breakout, and the next goal could be, okay, let's go just two numbers, because the euro kiwi is very volatile pair. You can do the analysis even on the 30 minutes, and you can be picking huge pips. Look at this. This is like big, right? So this one, as it's touching again this level, and what do we see here? We can see the price is moving up, and what's happening with the volume? It's quite nice volume, right? So here most likely this zone would be breaking up. So we would wait for the breakup, for the break higher with this. We set 2 levels, right? And so we will need to see what will be the market structure here. So we need to see the break, then the retest, and then some market structure. Then the best thing would be some stop hunt, and then the continuation up, right? Well, this is, as said, just the planning, the trades. This is the pound, and this one is amazing. I mean, I'm kind of pissed off about this one, because I had a good trades, but in our signal service we actually entered the sell in here. The price went down, and then we moved the break stop loss to the break even. So we've been taken out here on the break even, right? And then of course what was happening, right? So this really makes you pissed off. And as we all agree, the pound is weak, Japanese yen strong. Why? Pound simply weak, Brexit or whatever, I don't know. The banks are this. Safe haven, JPY is getting very strong against it, right? So we can see the retail traders 72% to the short side. So it's good to go against them. So you want to go sell on this market, of course. And I think that this trend could continue. So you can wait just for the small retracement. Always, I suggest to put the stop loss behind the 2 levels of swings, right? Because here the traders, they enter at the breakout of this low, so they have a stop loss here, and the stop loss in here most likely will not be stop hunted. So just waiting for this break, which happened. If you don't have a trade, you can wait for this retracement and put your stop loss behind the 2 levels. And your target could be even just those 2 levels, right? So like this, it's giving like 1-to-1. So let's go at least like that. 126. My long-term target is 120. Of course, if you have a balls, you can do this, but it's up to everyone. So as I said, this is just doing the pre-plans. Right now the Kiwi yen perfect, right? Kiwi weak, yen strong, because it's safe haven currency baskets. We can see retail traders doing just the opposite. It's perfect. So most likely it could be good potential to go short like this. And this one could go all the way down here to the structure. Next one is USD SEK. I mean, I love to trade these currencies, USD SEK, USD SGD, but I am not collecting the data for them because it's not showing the correctly, and the reason is that the volume is traded so small. You can see here is just 100 lots traded on this, right, from the provider, which I'm compiling the data. So the data are not the correct, but if you trade these currencies, most likely they go with the dollar, and we have a strong dollar right now. And here is actually our trade in the signal service where we've been trading these breakout, and I think we are in the trade since here. We have entered on the breakout in here, and our stop loss was 1.4, so our stop loss was quite big. It was here. We went with 1% risk, and we have the target pretty high, so our trade looks like this. I think this is how our trade looks exactly. So it's not so great risk reward, just 1.38 or something like that, but I think it's gonna be good trade, this one. If price the retrace, you still have the chance to join this. So here is the Aussie franc, and this one looks very good, right? So we have the Aussie weak, franc strong, and here is, you can watch the price section. You can see that the retail traders are most likely bullish, so you can go against them with the banks, right? Perfect. So simply you can trade a breakout, or even you can go with a higher risk on just here before it breaks. Stop loss above the whole number, and if you go here into this market structure, you should be fine, right? Aussie Kiwi is the pair I don't trade much, but I think it can continue higher, right? Because now is the question: Aussie Kiwi, both currencies from the same market basket, but which one is stronger? Well, if this is for the another explanations of the total volume and the market exposure. However, if you look just to the exposure of the retail traders, we can see that it would most likely continue. However, right now here is I would wait for some retracement or the things, but there is much other markets which are more interesting. Franc yen, this is the similar thing. Yes, both currencies from the same basket, not trading it much. This is the Euro Aussie. This should go up because we saw that the banks are bullish on the Euro and bearish on the Aussie. However, this distance is too big, and it's 48 to 52. This is what I don't like to trade, because the market makers, they have a huge money, and they have the ability to move it all the way down here or even here. So I don't see any big edge right now in this market, so I will skip this one. Look how many trades we already planned. This is the Euro franc. This one should go still a little bit down, but I don't like this market structure currently. I will not trade this one. This one is Euro JPY. Here we have on this Euro JPY, here we have this fight, right? Because the Euro is bullish, and JPY is bullish as well. However, which one right now is and look, the retail traders, like 54% against 46. It's nothing. It's not interesting in this moment. This is the pound Aussie. I don't like to trade this one. Of course, the retail traders are more to the long side, so that's why it's going down. However, pound is weak, Aussie is weak. This could do anything. So first of all, I want to see the clear trend on the market maker size, then I'm looking for the what's the retail traders are doing. This pound franc is good because we have a weak pound, strong franc, and we can see how the retail traders are behaving on the opposite. So this could be perfect trade like this, right? So if you set this trade like this, could be, or even not to make just a big targets, because then it's doing too much corrections, and it would be very frustrating this when it's going sideways. Pound kiwi, market structure is very difficult currently. Even the retail traders are to the longs. We have the weak pound, weak kiwi. I'm not trading this pair right now. Kiwi cat, both currencies from the same basket. However, I already said that cat is much bigger market, so there is a big probability that this will continue down. So I would plan the trade like this. You can put stop loss just above here, because I think that the market makers will not give a chance to these buyers get out from the trade, so most likely they will take it down. So our target could be onto the whole number like this. So next one is kiwi franc, as well bearish market, because weak kiwi, strong franc. Retail traders 20% to the short side, 80% are in the bullish, so this will go down, and it could be traded like a retracement in here with the stop loss above this whole number, and target like this. I think that those are, we can have much bigger targets, because actually after this big accumulation, this will not move just down like this. This will drop fucking hell very big. But let's better do the small targets and re-enter again, because the situation can change anytime. So what we have here is this. This is most of this cross and these pairs. So these I don't trade much, and as well here is the USD-CZK. This is the pair I like to trade, because when the dollar is strong, this one is going strong again. So let's look to the USD-CZK. What do we have here is market is moving up, and I think it could go higher, but for the purposes to explain how to work with my trading tool, we will skip this one, right? Okay, so this is it. Now let's what we have done is actually this, that we have planned all this trade, and look how they are here. Or I just click to change all the trades which I have planned, so I don't have to find them. I just go through all my plans in here, which is simple, right? Which is simple in here. So I have actually planned, I have actually made a plan for the 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 for the 21 trades, like, right? You don't need to trade 21 trades to make money. This is too much. You need just the best ones, and thanks to these tools you can wait for them. So now here let me explain what is really amazing on all of this. What we have done here is that all these planet trades right now, what we want to do is, and I always says that most important thing is the risk management. So what do we want to do? For example, on this Euro GBP trade, if we will enter that, we want to risk for our trade specific amount of the money. We want to trade the most, I say always, trade maximum 1% risk, right? But we can set our risk, and what is the most amazing is that this tool, what we did here, will actually set the trade and automate the entries. So right now let me set up this. So let's go to this one, and no, okay, so it's here. So let's go here and we can set up our risk. So let's set it up to the 1%. And right now here in this box here, it's showing us the or the numbers and the facts about this trade. So our stop loss would be 160 pips. This is what it says in this box, so it should be 160 pips, right? It's 160 pips. Our take profit is 190 pips. Our risk is 1.83, so we are actually risking 1% of our account to make 1.83. And here is the lot size. Here is the what lot size will be opened. Here is what is our stop loss. What is the money we will lost if we lose. Here is the money which we will win when we win. And yeah, so this is the information we need to know. So right now we have planned this trade, and now look at this amazing thing. If you feel that this trade is good and you want to take it, you simply click into this. This will change this color into this purple one, and the trade will be traded once the price reach this level automatically. So you don't have to calculate the lots, you don't have to think, put the numbers, where to put the stop loss, this. You just plan it like this and you activate it. And then in here your planned trades, you can see Euro GBP is pending activated trade, right? So you don't need to have it as an active chart. So if you then go to the, let's say, EuroCAD, and I wanna activate this this trade, I simply click into this and it's active, right? I mean active. It's will be entered when this happen. So right now I have the Euro GBP, Euro CAD, right? For example, this CAD franc, I'm not sure if I want to take the trade, so I just have it like this, you know, and I can set up the alarm. I can set as well the alarm to the entry. So where is it? It's not in this one. And not in this one as well. So this is what we probably must still work on out. And yeah, so this is, I think, very cool, and I'm actually using these tools a lot. And this is it. So this is my trades. Actually right now I have planned the trades which I will be looking for to trade the next week. And I'm not, this is amazing because I don't have to use the trading view anymore. Actually I use it still for the analysis, etc, but this tool is amazing. And what you need to do right now, if you have set all this, so you can basically save this template, save FX Hunter plan. I can save it like this, and now look at this amazing thing. I can open a new chart here, Euro Aussie, and for example here I will set sell trade, and for these trades I can set up the risk for the, let's say, 3%. If I want to go with 3% risk, right? And I can open this chart. I can set up the buy trade. This is just the example, right? Of course it would be crazy to take the trades like this, but right now no, I did it wrong. So here is the Euro Aussie, here is the Kiwi CAD. I can set a buy trade. Here is the next one. I can set up buy trade, for example, right? So what I want to show right now is that look at it. So I can simply go to this template, and I have this trade plan here, right? So in here I have all these trades which I have planned here with the 1% risk. If I switch into this next one template, I have just these free trades which I have set up with the 3% risk. So basically what you can do with this, and you can, this is actually giving a new perspective or new tool to give the more advanced things to your platform, how to plan the trades, how to manage them, and everything. By the way, if you might thinking, what are these things? Guess what? This is the when the COT data was released, so I know exactly when they did the positions and etc etc. So it's actually very cool because right now look at this. So for example, I want to know exactly when the data was released, so I can go, let me bring the Aussie. So this helps me to decode when anything happened on the Aussie. So for example, I must change to the Aussie right now, and I can see. So let's do this small analysis right now, right? So we can see that the banks has closed these big shorts positions here when they had these biggest shorts positions in here. It was on the 20th. It was on the 20th of the March, right? So let's go to the 20th March in here, and we can see probably it was in here. So we know that in this zone it happened, right? So we know that they closed the positions in here in the 20th March, and then we can exactly start to follow when they are adding the longs, when they are adding the shorts, etc etc. And in some more videos, or maybe in some private lessons, I will be explaining how to find out where is the positions and how to trade it, right? Well, so this is it, and it's just the beginning of the what I am working on, and I am using for my trading. Maybe I will share it, maybe I will not share it, and once I will leave all this to you to trade. Here is as well the thing which is possible to see. Look, here is the dashboard, and it's showing another crazy things, how the retail traders are trading and how you can go against them. And this I will be explaining in the maybe next videos, because this one has already 1 hour and it's boring. So I just wanted to show this crazy tool. All right, have a great weekend, my friends. So this was the specific Forex market preview, and kind of explanation of my new stuff which I have, and I really love it. All right. Oh, now I actually realized that this is the alarm. So if the so if the price will retrace to the level, and you will activate this number one, the alarm will be sent to your mobile phone, which you have set in the sorry in the which you set in the, where is it, here in the notifications, right? You set enable the push notifications, and you set your MetaQuotes ID, which is in your MT4 in your phone. So once the price reaches the level, you will receive the notification, which is amazing. So you can basically deactivate the trade. You doesn't have to have it, but you can have set the signal. So once the price comes there, you will receive the notification, and then you decide if you enter the trade or not, right? And actually this X symbol is to delete it. All right, so this is it, my friends, and bye bye.